Okay, so CRTD may be setting up a really big bull trap here, but everything is still bullish. Now, I'm going to go ahead and go over some really important details for the coming session on Tuesday. Listen up very closely because this is actually going to mean your longs, right? So let's go ahead and get to it. What is up, you guys? Thank you so much for stopping by once again on this fine Christmas day, December 25th. This is ARCa coming at you with a CRTD technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's go ahead and dive in to the charts. Okay, so this is what I'm talking about, guys, okay? There's a lot of signals pointing towards the upside. Okay, first of all, fundamentally, we know the whole thing between GTII and CRTD, battling the short sellers, that whole thing. It's all looking good, all right? So I can give you several forms of bullish outcomes right now. Okay, first of all, we are looking at a little inverse herp and derp right here. So it's it's actually an inverse head and shoulders. Okay, so usually this actually presents a bullish outcome. Okay, great. So this is bullish, right? Another thing that's bullish in just regular raw price action, we're actually looking at ourselves sitting at my first of two actually. Important demand zones. Okay, this target is not relevant at this point. Please don't focus in on that just yet. I'm talking about in the medium term. It's not even. Don't look down there. Okay, so we're still looking good. Okay, but I want to present to you what could be accumulating here into maybe a small scale liquidity trap. Also, you guys, if you can hear the cheering outside of my studio, that's because I'm actually at a Christmas dinner right now here. The ARCa Bulls family is hosting. The ARCa household, is hosting dinner for Christmas night. So I actually had to explain to somebody something about stocks, and I had CRTD up on my phone. And in looking at it, I noticed something incredibly important. So I actually had to jump into the studio and record this and film it for you guys, okay? As I do see a potential threat that is not a reversal. It is more like a big pullback. Okay. All right. So now let's focus in again. We have a bullish setup. We're at the inverse head and shoulders. We got the supply, the demand zone here. Everything's looking good. We're above the demand zone. Now we have made this top trend line as a support. All good, okay? All good. The sky is the limit, okay? Let's go ahead and move on to the next chart and continue, okay? First of all, I need you to focus in on... Okay, let's go back to the previous chart. Look at the log down here, okay? I'm using a logarithmic chart here, okay? Now, on the next chart, I am not using a logarithmic chart. I am actually using a traditional chart here, and I am noticing that there is a falling wedge, okay? Now, these formations, they have a... They have kind of a low standard, okay? They don't really hit all the time, but they tend to do good, okay? That's another bullish statement. The fact that we're in a falling wedge, everybody knows that falling wedges lead to the upside, okay? We can take actually two trend lines, okay? We can take one from right at the top of the triangle right down to here. This is one way of gathering that projected target. So let's just say that on the following day we do break out, right? Let's just say that it would be here. The upside would lead us to about $1.37, okay? Great. Everything is looking good. Right now, the thing is that usually these triangles tend to break out at about 70% to the apex. So in this case, we're about 50% of it, and we're right at the resistance of it. Okay, so that's the sign number one. And I'm going to give you a statistical side too that is actually telling us that there's a downside coming, but everything is pointing up. This is very important, okay, you guys? So we are facing the resistance of the 30-day exponential moving average right over here. We do have support of the 7-day exponential moving average. Everything looking good. And also we do have this support right down here from a range that we looked at from days ago, okay, you guys? So, and also the support that we have from the descending broadening wedge, which is located on this red trend line here. That's also another support. Okay, and that support has a lot of confluence with the 1.618 at about 43.54. All good. Okay, so now let's go ahead and continue flipping the script just a little bit. Okay, let's look at the the data. This is going to be the what's called the statistical data. Okay, so let's go ahead and load that, and I believe it's actually right. Hold on just a sec, guys. My apologies. This is very important for us to look at. Okay, so here is the statistical data. I have actually run a back test, particularly to the downside, using volatility versus momentum profile. Okay, so I do apologize for not being as prepared as I usually am, as I'm actually at dinner for Christmas, and I'm doing this in the biggest rush because I did notice something very important for us. Okay, so now in running the back test of volatility versus momentum, I actually did come across a downside thesis here. Okay, so out of the on the daily chart, okay, out of the whole 15 total iterations throughout the entire trading history of CRTD on the daily chart, of course, we are looking at 13 correct iterations out of 15. Okay, that's giving us an average downside accuracy of 86.66% with an average downside thrust of minus 48%. Okay, so 48.36. And the span is about 77 days. So this is a little off. I'm not sure why it's coming out. It doesn't matter. It's an averaged metric, okay? So these are just remember, they're statistics, they're not certainties, okay, you guys? So please pardon my urgency here. It's just that I really do need to get back into the dinner, but I want to get this out of the way as well, okay? So now anytime that volatility has reached the critical zone, which is within the 90 percentile within this box here, I have taken note of that iteration's duration. I have taken the note of the downside pressure, and I have also taken the iterations guesses to the downside correct versus incorrect. Okay, so that has given us these metrics right over here. Now the interesting part is when we start applying the minus 48.36% downside pressure. Okay, please notice that momentum is suggesting a continuation to the downside, and we are now starting a contraction phase in volatility as well. Okay, so now let's pull up that triangle that we were looking at. Well, actually, the triangle is right here. Okay, so let's look at this falling wedge. This is the first of two falling wedges that I'm going to show you, okay? So let's go ahead and subtract from our current position, since the signal is technically fired, let's go ahead and subtract minus 48.36% from the following day. Okay, so 48.36% leads us right, let's see. 48.30% is close enough. Look at this. Leading us right to the support line of the bottom of the falling wedge, okay? Cool. Now, let's go ahead and now look at the ARC DBSI. DBSI is actually an indicator made by Crypstex, and Crypstex has since endorsed me, and since they believe in my trading style and all that stuff, they've given me access to some incredible tools, okay? So this particular tool is a statistical tool. It takes a measurement of every single candle printed in the asset's particular time frame, okay? So we're looking at CRTD 12 hours, so it has taken note of every single candle's value and has presented it to us as a percentage value right up here, located conveniently at the top right of your screen. As you can see, the bears are leading the way on the 12-hour with a 60% and bulls at a 40%. Okay, we have not printed a sell signal just yet, but something tells me that it may tomorrow or on Tuesday, right? So the buy signal is blue, the sell signal is red. Okay, so that is definitely another thing to keep in mind. Now let's go ahead and just load up a 13-day exponential moving average. Okay, so we're gonna have to actually make a quick little setting right here. We're gonna block out every other moving average and just look at the one on a yellow line, okay? Because DBSI tends to work best with a 13-day exponential moving average, and we'll go ahead and change the metric up to 13 days here. And now you can see that we are right at the border of that 13-day exponential moving average, okay? We're bullish when we're above it, we're bearish when we're below it, okay? So this yellow line is that 13-day moving average, okay? Now, yes, so we do have that minus 48.36% right over here as well, suggesting on the 12-hour chart a larger wedge, and still suggesting the very support of this falling wedge. Okay, you guys, so that's another sign. Okay, that's another sign that I'm looking at, and I'm talking bull trap because of the inverse head and shoulders, and because the RSI is printing back to back bullish drives of hidden drive. I'm sorry. these are drives of hidden bullish divergence. They're coming in back to back, so everything is leading towards the upside, but except one time frame. And that time frame is this one right over here. Okay, so let's look at this. Okay, so it is the bi-hourly time frame suggesting downside. So and then also look at the 6 hour suggesting upside, daily suggesting upside. And if we just take a look at real quick at the 30 minute is sideways. Okay, so that is suggesting no direction whatsoever. So check it out right over here. So we are actually now not facing towards the upside to where we can be gravitationally pulled right into the bull strength percentile. We're not in that position anymore. We're not right over here, okay? We're actually in the middle of this section where we can actually find a potential gravitational pull down to the lower side, okay? So that is actually giving us a little bit of a hint that this could be a fast corrective move and likely to accumulate here so that we can actually bounce on the next day heavily to the upside, okay? So in this case, it's very hard for me to be bullish on the next day, okay? But I am bullish for the following day. So meaning Wednesday or Thursday, I am looking at some bullish things happening. But this could likely be an accumulation period for a thrust to the upside. Okay, so far, data is suggesting the downside, and formation analysis is also suggesting the downside. Okay, so RSI is suggesting the downside on the immediate short term. Okay, and also the DBSI is suggesting bears in control. Okay, so I don't want to be a Debbie Downer whatsoever, and trust me when I say that I'm actually long GTII. So this could likely be a pretty good entry zone. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, as I can't suggest for you to buy or sell any assets. Okay, I need you to do your own DD and everything will be okay, you guys. So this is, I just wanted to put this video together urgently for you guys. I'm sorry that it's a little stuttery and little, I don't know where this is and where that is. It's just, I had to slap it on together real quick so that you guys can be able to see my thoughts as they actually surged through my head during the Christmas dinner right outside. Okay, another reason that we can actually potentially look at this as a bull trap is for the fact that we actually printed this hammer right down here. This hammer is usually a bullish signal and a continuation signal. This candle printing the way that it did is the validation candle usually found when we're printing like an abandoned baby like this or something like that. You know what I mean? So this formation is a typical formation for a continuation to the upside. So this is another bullish statement. So I honestly think we can actually face this little tiny bit of an upside, find that resistance at 72 cents and come right back down to 36.17 or 36.09, right around there. Okay, you guys. So I am noticing that the 36-cent level is popping up very, very often. Okay, now look at this right here. I'm going to go ahead and put a 36-cent level right here and take a look at this candle right down here, right at 36.17. Okay, or I'm sorry, right at 36. Let's see that value, 36.11. That's also coming about for us. Okay, you guys. So please notice that there are some things at play. The very bullish thing about what we're looking at right now is that yes, we have a huge descending wedge. We do have the volume profile meeting that criteria. We do have the declining volume, the declining pattern, lower highs, lower lows. Everything is looking good, okay? But except the fact that usually these patterns break out at about 70% to the apex is kind of define the upside continuation from this point. Okay, know that this is very discretionary in the way that I'm explaining this. This is just a silly pattern. Okay, I'm just saying that a lot of people follow pattern, and the potential for us finding a liquidity trap is pretty great. Okay, so people can actually buy right here thinking that it's going to go to the moon tomorrow because everybody's late, of course. Okay, but in fact, they're going to trap people right here and let this thing capitulate literally from 69 cents all the way to 36 cents, of which could potentially be a greater entry right down there. Okay, you guys, please do know that we do have a support at about 43 cents, of course. Okay, that's the 1.618, but the most relevant supports that I can actually see for us at the time being is going to be the 2 fib at 35.80, and which is already in confluence, of course, with the statistical downside. Okay, so 35.80 to about 36.17, right around there, you guys. Okay, so that's going to do it for the video tonight. that, you guys, I wish you a Merry Christmas, a great rest of your long weekend if you do have that long weekend. So if you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord, okay? I'll make sure to leave those links in the description below for you to consider joining the ARCa trading community. With that said, I wish you well. I'll catch you at the bell on Tuesday. Adios.